Hey everyone, so today's video is on the housing trends for 2024 and what everyone is sort of expecting to come from the housing market over the next year. So we're looking at a few reports from CoreLogic in relation to what everyone's expectations are. So at the moment, it looks like that 46 plus 13%, so 59% expect that there will be an increase in house prices over the 2024 year. 25% expect it to remain the same, whereas only 16% expect the housing market to actually go backwards. So you can see there's a big divide here in the market. The market is generally expecting that house prices are going to go up, which is scary at the moment, especially considering that prices are really high at the moment with the high interest rates as well. How much further is it going to go? So the most significant factors influencing the market in 2024 are rising interest rates, which at 59% is concerning most of the market. The second most is the increase in migration and population growth. So the government at the moment is letting in a lot of migrants from overseas, and this is what's causing housing supply to basically diminish because the demand is so high. So all these people need to go somewhere, and they're going into the houses that we have at the moment, and the new stock that's coming on in terms of new apartments and houses are not getting built fast enough. So there is a bit of a concern that rates are going to drop. It is fairly low, but I think the fact that rates are going down is probably going to have a positive impact on where prices are going to go, just because it's going to be cheaper for people to, or for people, for investors to get into the housing market to start with, because the rates are going to be lower. So you can see here a few other smaller things: government policy, mortgage stress, surprisingly, which is only at 1%. And then you got global events like wars, geopolitical events, which are at 1% as well. So the three main things which are concerning the market are rising or falling rates, migration and population growth, and housing supply and demand.
It's interesting that those main influencers are all dictated by the Australian government as well, specifically interest rates, and then also migration. They also have the discretion of how much people they put through. So it'll be interesting to see how the government reacts to this news. I know they have a lot of pressures from different people, different stakeholders within the economy who do want to influence housing prices. But yeah, it's up to the government and how they use their discretion.
100%. And not only that, there is an election that's coming up next year. It is a bit far away, so the policies that they come into or that they speak about or they're going to roll out now will definitely have an impact for next year, especially because a lot of Aussies are getting priced out of the market. And it looks like there's two ways that they could actually ease housing or house prices. Is either they could build more, which is a very big feat in itself, just because it takes a big lag for properties to actually become available for builders to start building. Probably the easier lever would be to cut or slow down migration, which they have control of if they really wanted to do it.
Mm.
So house values increased overall at 8.1% in 2023. So that's a average number across the whole of Australia, taking all of the states, both regional and metro. So some areas, I know where I am at the moment, that 8.1% seems small. Things have gone up a lot more in the northwest of Sydney, but this is just an average. So even though the expectation is for 2024 that house prices are going to go up as well, demand is expected to slow. There's going to be higher cost of living pressures as well as higher rates and taxes and interest rates, which are all going to cause housing demand to sort of drop off over the next few years, I think. The thing is with that is if they continue to bring migrants in at the rate that they are at the moment, they still will have to go somewhere. So even though demand will slow because of the higher costs, the taxes, the interest rates, overall, once the demand will start to increase when the supply starts to diminish because not enough houses are getting built to house everybody. So I also saw a really interesting ratio the other day as well, the savings ratio, which has dropped to its lowest level since 2007, which sort of makes sense just because rates are really high at the moment. A lot of people are putting more money towards their mortgage. So they're not really saving as much. And we all know what happened in 2007 as well. We had the GFC. So it is a bit alarming, I think, that households are not saving generally for a rainy day. So, well, like I mentioned before, the mismatch in supply and demand will continue to push prices higher. If demand continues to grow and there's not enough stock to fill how many people are going to move into these houses, then definitely prices will have to go up overall through 2024. So this is another interesting graph that I saw, and this compares how many people or the investors versus the owner occupiers that made money and lost money. So if we look at, say, for example, in Sydney, owner occupier homes 5% lost, whereas investors 11.4% lost. And we take that on the other flip side, 95% of owner occupiers gained and 88.6% of investors gained. So this is looking at the September 2023 numbers and comparing the resale values lost versus gain. So I know it's a bit hard to understand, but generally what this means is the higher the number on the gain side, the less people are losing money on property. So if we look at a hotspot to say like Adelaide, you can see here that above 99% of people made money, or 99% and 98% owner occupier and investors made money on the sale of their property, whereas only 0.3% and 1.2% respectively lost money owning or selling a property. So you can see with the boom towns, the boom states, Brisbane, Adelaide, and Perth, these percentages on the pain side are relatively low compared to the gain side. If we look at the areas that are not doing as well, say, for example, Darwin, you can see that Darwin on the pain side is a lot higher than, say, compared to somewhere like Adelaide as well. So if we look, sorry, Dave.
So there you go.
If we look at the national average, most people made money in property over the September 23 quarter, as you can see here.
Yeah, I just want to say that in essence, it's profitable to be a property owner, and you can see how investing in this asset class will really helps these people build wealth. And I think the disparity is going to be really big in the future between property investors versus people with no properties, as the affordability of houses continues to diminish as well. So you're either in it or you're out, and it gets really hard to build wealth when you're on the opposite side of things. So something to really consider.
100%. And I also think the gains that happened in the last few years are not an accurate predictor of what's going to happen in the future. We did have an event, which was COVID, which caused a lot of the governments all over the world, or basically the whole world, to shut down and print money. All that excess money went straight into assets, housing, and stock, so the stock market as well. But that doesn't necessarily mean that the gains over the last few years are going to be the gains of the future, especially as banks or as central banks around the world keep rates higher for longer. It doesn't necessarily mean that if you made a 30% gain last year, that you're going to make a 30% gain next year. So just be careful about that.
Yeah, and you just hopefully I'm not going too much of a tangent, but you pointed out another interesting economic you know uh, kind of event that usually happens when the government comes in and prints money. There's all this new money circulating in the economy, and what tends to happen is that it eventually filters down into real assets, and where it usually filters down to is land, is the hard asset. So it's also something to consider the next time these events actually occur. What's going to happen to this money in the long run? Where is it ultimately going to end up as well? So that's a very interesting economic phenomenon that occurs when the government prints money.
Exactly. Okay, well, that's the end of this video. If you have any questions, feel free to reach out to us. Catch you soon.